Hey everybody, it's Aaron Norris with the Norris Group. It is July 28th, it's Friday, and if you had $100 million, if you just went public, what would you do it if you were a real estate tech firm? That and much more as we cover the biggest headlines in real estate. Do not miss the radio show and podcast this week. We've got a very popular topic, building, this week. One of the strategies that are really working in this market. We've got Alex Serrato. He's a builder out of the Inland Empire. He's been in the industry for over a decade. He shares with us when and how he got started in the building industry, price volatility and costs, and how that's changed over the years, and of course, much more. Don't miss that on the podcast. The National Association of Realtors reported a 1.8% decrease in existing home sales for the month of June. The California Association of Realtors reported pending home sales decreased 0.9% last month to 117.9 from 119 about a year ago. The latest S&P CoreLogic Case-Shiller indices shows home prices were at a record high for the sixth straight month, having increased 5.6% in May. And the Mortgage Bankers Association reported mortgage applications increased 0.4%, following up with that hot market. Interest rates took a little bit of a decrease once again. 30-year rates are now at 3.92% and 15-year rates at 3.2%. The second quarter of 2017 saw an average home price gain of $51,000, the highest since 2007. Freddie Mac announced this week that it will no longer allow lenders to contribute gifts or grants to reach the 3% down payment requirement for their loans. Quicken Loans, Guaranteed Rate, and Fifth Third Bank were among the lenders that had developed programs that help consumers meet that 3% threshold. All of these programs will no longer be allowed as of November 1st of this year, so it's going to in effect pretty quickly. Borrowers will now have to come up with the 3% down payment from their personal funds, and lenders will not be allowed to do any kind of funding inside of escrow. There are very few exceptions, so definitely going to want to follow this if you're a lender or a realtor working with first-time buyers. Los Angeles is the top market for investment sales after the Manhattan market dropped 55% in the first half of 2017. Real Capital Analytics shows Los Angeles is now leading the country with $13 billion in commercial real estate in the first half of this year. Manhattan only closed $11 billion worth of real estate compared to $23.9 billion in the first half of last year. That's a huge difference. Observers of the market believe the huge decrease is due to an increased gap in sellers who want to cash in on deals from last year and buyers who are more careful about what they are purchasing. We are especially hearing that in California in the apartment space. As brick and mortar retailers shut their doors and move out, e-commerce companies are moving in to their warehouses. Unable to compete with online retailers, more companies, especially those working with fashion design and manufacturing, are leaving not only their storefronts vacant but also their warehouses. As consumers get more and more comfortable with online purchases, there's a growing need for e-commerce companies to be closer to larger markets, especially global companies, so they don't have to ship as much, all that coordination. So a recent report showed vacancy rates for industrial properties are at their lowest in 17 years, and their rents are record high due to increasing demand for distribution and warehousing of those online retailers. John Burns Real Estate Consulting says 20-somethings grew by 4.7 million from 2005 to 2015, and they're expected to decline slightly from 2015 to 2025. However, early millennials originally pushed demand in urban neighborhoods, and they're now expected to help increase the demand for homes in suburban neighborhoods. Suburban is a word that John Burns created in his book, Big Shifts Ahead. Great read. Everyone, especially real estate investors, need to read it. And this is just urban-like developments located in the suburbs. So successful builders are now focusing specifically on these suburban neighborhoods, these infill neighborhoods. It'll be interesting to see some of these developments pop up in cities around California. So what were the hottest real estate markets in July? Not all of them are in the Bay Area, surprisingly, and the list includes markets that are affordable, and then of course those markets that are just hot because they're really hot markets. Top 10 include Vallejo, California, Kennewick, Washington, San Francisco, San Jose, and San Diego, and the other California cities that made the top 10 include Stockton and Sacramento. So what is spurring millennial home ownership? Well, according to a Forbes article, real estate investing. For the fourth year in a row, more millennials than ever are buying homes, 40% of them being under the age of 36. Well, 55% of millennials are interested in real estate as an investment, and over half in an investment even if it's not their primary residence. And I've personally been dealing with this. I have millennials call me, and one of the first questions I ask is, do you own one? And honestly, they would rather talk about investing in a rental property instead of actually living in their own home, which is very fascinating. So Redfin has gone public this week, now valued at a cool $1.2 billion. The Seattle-based company has now raised over $138 million this week. What's next for Redfin? Well, the company says it's planning on using some of those proceeds to invest in a completely digital buying and selling process. What are some of the features you'd like to see in Redfin or any other tech firm that's raising over $100 million these days? What are some of the things that you think could really help the market? new innovations. I would love to hear what you got to think. If you're on YouTube, please leave a comment below and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video. And if we missed something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. Upcoming events: August 16th, we'll be doing 10 life-changing days of a real estate investor at Invest Club out in Irvine. September 14th, we'll be doing that same talk, but we'll be up in San Jose at SJREI. And 2 days later, we'll be doing Cashing In on a Boom. We're going to be covering the top strategies in California that investors are using to buy deals in today's California market. And of course, September 22nd, I Survive Real Estate. I am so sorry, we are sold out. We have never sold out so early, but we're at capacity and we do have a waiting list. You can find out more information on isurviverealestate.com. We will work on a plan to live stream it, and we will announce that information at a later date. For more information on hard money loans, including fix and flip, buy and hold, and new construction, check out thenorrisgroup.com. Or if you'd like more information on passive investing with trust deeds, check out tngtrustdeeds.com. And with that, have a fantastic weekend, and we'll see you next week.